Hey, TMFG community, Carlo Cancino here with John Yaconetti. And in today's Ask TMFG episode, we've got part 2 with Bob Dorrell, mortgage agent with Dominion Lending Securities in Whitby. So if you do like our content, please do subscribe to our YouTube channel, give us a comment after the video, or just give us a like. In today's episode, we've got our friend Bob Dorrell back. Bob, if you don't remember from the last video, is a mortgage agent with Dominion Lending Centers in Whitby. So Bob, nice to have you back. Thanks for joining us.
Great to be with you guys.
So in our last video, we talked about the state of the interest rate environment, where it was, where it is now, and what we can expect going forward. In today's video, we'll discuss, knowing all that information, what should people be doing who have mortgages that are up for renewal or people getting into the market? So Bob, I'll turn it over to you. If I have a mortgage up for renewal, what are the things I should be thinking about?
Well, thanks, Carlo. Thanks, John. Great to be with you guys again. Yeah, a meaty topic. So the last episode, we were talking about interest rates and that we're in this rising rate environment. And I think that we're going to be in this rising rate environment for a little bit of time yet, until we start seeing inflation coming down for 3 or 4 consecutive months. So if you've got a mortgage today and it's coming up for renewal, say sometime in the next 6 months, maybe even 12 months, I think a lot of people are concerned, almost like when stock markets are going down, we all think they're going to go down forever. And when interest rates are going up, we think they're going to go up forever, and they're not. But it is a scary prospect. And so people are, one strategy, if you've got a mortgage coming up for renewal, is to not wait for it to mature and do an early renewal. You can do that pretty much any time prior to your renewal date. Just a question of whether or not you would have a penalty to pay or not. If you do, it's probably going to be small, if at all. But that's option number one, is look at early renewal. The second option is, once you're inside of 120 days, you could transfer your mortgage from your current institution to another institution and lock in a rate 120 days ahead of your mortgage renewal. And usually when you're transferring a mortgage from one place to another, there are no fees involved, typically. So there may be some situations there where there might be, but generally speaking, there's no fees. The other thing to think about is everybody always thinks 5-year variable, 5-year fixed. One thing to consider is maybe a 2-year fixed or a 3-year fixed if you're not comfortable with variable and you don't like a 5-year starting with a 5 handle. So a shorter term might be an option, although I will tell you today, a 1, 2, or 3-year term right now are about the same as a 5-year, because we have, I won't get into a lot of detail, but we have this inverted yield curve going on where the Government of Canada 2-year bond is actually 3.5 and the 5-year Government of Canada bonds 3.15. So actually 2-year money is a little bit more expensive, but it is an option, and it's something that you should think about. So those are a few ideas if you've got a mortgage coming up for renewal to consider.
So now that we know of a couple strategies for people renewing the mortgages, what about people entering the market for the first time and looking to get their first mortgage?
Yeah, and I think the first thing you have to do is get a pre-approval, right? So you want to talk to a mortgage agent, somebody like myself, and you want to get pre-approved. That's the first thing to do. We'll go through an application, understand how much you can afford based on current rates. And, a lot of times lenders will lock in a rate for 120 days if you're in the market and are likely to buy and close within that 120-day period. So that's number one. Number two is find yourself a good real estate agent, obviously, and somebody who spends a lot of their time working with buyers. So that's the second thing that's important. And then the third thing is to be patient. Right? I mean, prices are coming down. They're probably going to continue to come down. But like a stock market, don't try to time the bottom. This is a long-term investment. But at the same time, don't rush. Be patient because, this market has moved from being a seller's market to a buyer's market.
Yeah, a lot of great tips there, and really does align with our philosophy as well, not trying to time the market. Like you mentioned, if we're having a long-term investment there, the time to appreciate will be there. So I want to say thank you, Bob, for providing your expertise on these issues. I know a lot of our clients have had a lot of questions, and probably a lot of Canadians had a lot of questions about the real estate market. But as always, that's today's episode of Ask TMFG. If you do enjoy our content, remember to like, comment, and subscribe to the YouTube channel. Until next time, and on behalf of Bob Dorrell, I'm John Iaconetti.
I'm Carlo Cancino.
And this has been Ask TMFG.